SoundHound AI reported quarterly financial results on Thursday, May 8th, after the stock markets closed in the United States. The stock price is down almost 7% on the day after the company reported those results. Of course, I warned investors not to buy the stock before it announces earnings because the main reason I stated was that it was an overvalued business with many of its excellent prospects, and it does have a great future of prospects ahead, but much of that was already priced into the business. So I'm going to review the company's latest earnings results, highlight some of the things that SoundHound AI stock investors need to know, and then I'll share with you again my proprietary discounted cash flow valuation model that shares with you my calculation for what I think this stock is worth today, and update my recommendation and let you know if I think SoundHound AI stock is a buy, hold, or a sell following these earnings results.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
SoundHound continued its trend of excellent revenue growth, reporting $29.1 million in revenue in the most recently completed quarter. That was up 151% year over year. And I think this is one of the reasons that has a lot of investors excited about the business, as well as the fact that it's an artificial intelligence business, which is the most popular investing trend right now, given how quickly AI is growing and given how quickly the technology is improving. Some big highlights: they unveiled their new agentic AI platform, which they're calling Amelia 7.0. The platform marks a leap forward with smart AI agents that reason and perform complex tasks with human-like interactions. This is also something that I was looking for from SoundHound AI in the restaurant segment. In the preview video, remember I did a preview, the video titled "Should You Buy SoundHound AI Stock Before May 8th?" where I previewed the upcoming earnings release and I warned investors not to buy the stock. In that preview, I said one of the things I'm looking for is for SoundHound to report expanded relationships with existing customers, because it would demonstrate to me that they're offering their customers a good value proposition. And I did see that here in this quarter. So they said they expanded partnership with one of the largest pizza chains in the United States, providing their phone answering and AI solutions to thousands of locations. And I think this is a great partnership because pizza chains, they need this technology, right? They spend so much money, so much employee time answering phones and taking orders. Not everyone is ordering on the website or app, and many people would prefer to just call in and make an order. And that's something that I might actually prefer too. I don't know if you're happy with the pizza ordering process, but I think the technology, for instance, for Domino's Pizza is clunky, doesn't work very well. I think it takes too long to order a pizza on Domino's website. And so if they can offer the AI over the phone service, I think it might be much more convenient than going to the website and going through all of the options and all of the time it takes to make an order. So this is a relationship where I see it as a win-win between SoundHound and pizza chains, because it lowers their cost to serve customers. And at the same time, it also improves the service because the apps are getting clunky and it's taking too long. And so if you find an opportunity where you can lower your cost and improve the service you offer your customers, you take that chance every time. You take that move every time. And so I think SoundHound has a great opportunity here. So in the automotive segment, they joined forces with Tencent Intelligent Mobility to bring world-class conversational AI to the intelligent cockpits of global auto brands. And this is another relationship where I see it as a win-win partnership for SoundHound AI and car companies. Because when you're driving a car, you need to have your hands on the wheel and your eyes on the road. And trying to dilly-dally with your phone and your cockpit during when you're trying to drive, I think it's not safe. And people should not be doing that while they're driving. And so if you can just speak to your technology and be able to say to the car what you want to have done rather than having to touch the buttons, I think would be a huge improvement in the driving experience. And at the same time, it also improves SoundHound AI's prospects. And I'm going to talk a little more about that in just a little bit. So they also unveiled the first ever in-vehicle voice commerce platform that enables seamless voice-controlled food ordering on the go. And this is what I wanted to elaborate on. When you're driving, and I mentioned already, your hands need to be on the wheel, eyes on the road. And let's say you want to order Starbucks and you want it to be ready by the time before you hit the freeway on your commute to work. And so you can do that, just as you sit in your car, you can order Starbucks and have the payment go through everything seamlessly just with your voice from your car, and then drive up to Starbucks and have them deliver the coffee to your car. Now that's very convenient, right? That's even more convenient than ordering it on the app because, as I mentioned, these apps have become very clunky, a lot of clicking and searching, and it takes too much time to make these orders. I think companies have gone too far with their apps in the way they try to monetize more purchasing activity and increase every order amount rather than focusing on improving the customer experience and making it as seamless as possible to make an order of the product you want, right? It's become more and more difficult to do that. And with the voice ordering, it's quick, it's easy. The payment information is already on file. So if you can just say, you know, order my usual drink from Starbucks, and you just go in and pick it up after you make that order, makes it so much quicker. You don't have to open your phone and open the app and uh, read through the pop-ups and all of these other things that they make you go through before you can actually go to the area where you order your drink and you go and you pick it up. So this is an area that I was glad to see SoundHound make progress on, and that's the improvement in the losses on the bottom line. So they generated a 151% increase in revenue, which increased to 29 million, up from 11 million. And their non-GAAP net loss on the bottom line did increase from 20 million to 22 million. But when you divide the loss, the non-GAAP net loss from the revenue, the percentage loss improved, right? In the same quarter last year, this was almost a 2-to-1 ratio. They were losing almost $2 on the bottom line for every $1 in revenue they were generating. If you look at that number this quarter, they're losing less than $1 on the bottom line for every dollar in revenue that they're generating, right? 22 million in losses, 29 million in revenue. And I say I don't mind companies losing money on the bottom line if they're making progress in improving those losses. And SoundHound had not been doing that. And in this current quarter, they demonstrated some improvement in that metric. They also improved the cash flow losses on their cash from operating activities. In the same quarter last year, they were negative 22 million. In this quarter, negative 19 million. So still negative, but improving. And they reaffirmed their 2025 outlook, which is something I was looking for because of the uncertain macroeconomic environment. Still, if you look at my proprietary discounted cash flow valuation model, the intrinsic value per share is $4 and the current market price is $9. So it's down almost 7% today, 6.87% as I'm recording this video. And the intrinsic value per share is still way below the current market price. So I still see this business as being overvalued. And even when I go to finchat.io, which is my preferred data source, and you get a discount with the link in the description to this website, the forward price to sales ratio is over 24. So while the business it has excellent prospects and it improved in the most recent quarter, I just think it's still way too expensive. And so I would rate this business as a hold not a buy.
Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.